Good afternoon, everyone, and welcome to our VectorVest live stream, YouTube live stream, Trending Thursday. Thank you all for being here. I see a few new names here already. Thank you, everyone, for being here. A big thing, couple of things. One, if you haven't subscribed to the channel yet, please do so. Very close to hitting our milestone of 10,000 subscribers. I'm trying to make it happen today. So if you're here, you like the content, please subscribe to the channel. My name is Glenn Tompkins, Senior Instructor here at VectorVest. Always my pleasure to be here. All right, so first thing that we do every day that we do Trending Thursday is we pay attention to the market. You guys are wondering what's going on and how do I take advantage of it? And those two questions are excellent questions. How do I make heads or tails of what's going on? So, many of you out there that are watching may not be VectorVest subscribers. That's okay. But I'm hoping that by the end of this presentation, you will be able to take advantage of a trial of this software at a super duper reduced price. All right, Joey will put the link in, not yet. He will put the link in a little later today to give you an opportunity to sign up for a trial. During all of this that was going on, our subscribers were saved by our guidance. Bar none. Bar none, our subscribers were saved by our guidance. Let's start off with what you see as a subscriber to the software. One, we can see that all of the major indices are up today. All right, let me click on it. All of the major indices are up today. The Dow is up 1.5%. NASDAQ up almost 3.5%. The S&P up over 1%. And our VectorVest composite, which is only indigenous to us, this is our indicator that tracks the market. We track over 8,200 stocks in the market in one indicator called the VVC. This is the indicator that we use for market timing. So many of you will say, well, why not use the Dow? Why not use the NASDAQ or the S&P? Because the VVC tracks 8,200 stocks, we feel that it is a better representation of the overall broad market movement. The Dow tracks 30 stocks. The NASDAQ tracks about 4,300 stocks, but it's very tech heavy. The S&P is a good measure, and many people will track what the S&P is doing to determine if their portfolios overall are beating the market. But again, it tracks 500 stocks. This VectorVest composite that you see right here tracks the move of 8,204 stocks. That's why we use it for market timing. Market's up today. Keep in mind, one day does not make a trend. Let's look a little deeper into the market. We have something called the color guard. The color guard tracks three of our market timing indicators. Price, which is the price movement of that VectorVest composite. We track the move of that indicator on both the week over week and day over day basis. The next indicator is RT, or relative timing. This is one of our core proprietary indicators, which looks at the underlying trend of the market. Is the market moving up or moving down? This indicator casts on a scale between 0 and 2. When it's above the value of 1, the market's in an uptrend. Currently, it has and will stay that way for a while, below the value of 1, telling us that the market's in a downtrend. How about looking at this indicator as a preliminary indication of when the market's going from an uptrend to a downtrend? You'll only find that indicator here. The next indicator is the BSR, or buy to sell ratio. Every stock in our database gets a buy, a hold, and a sell recommendation every single day. You can clearly see that we have a considerable more amount of stocks that are sell recommendations in the software than buys. So this indicator is below the value of 1, very extremely below the value of 1. The market is definitely at a level of being oversold. So with all of that, everybody in here knows that, right? Everybody in here knows that the market is the way that it is. Your questions are, well, what do I do now? All right. So given this information, we know where we stand. We do know with the market being down, but today is an up day. What do you do? All right, I'm going to bring up another graph. I'm going to bring up our market timing graph. Now remember we talked about the VVC, that indicator that tracks the movement of 8,200 stocks, where here it is on a graph. So if I'm tracking 8,200 stocks and I'm tracking that move on a daily basis, I can see when the market is moving up. 8,200 stocks, and when the market is moving down and how fast it's moving down. So we can clearly see when the market's moving down. Now notice that before I get into that, if you're not a VectorVest subscriber, I definitely want you to pay attention to this. All right, as a subscriber, remember I talked to you that we got our subscribers out of the market at the right time. Well, here's another indicator. See that indicator right there called the MTI? Oops, wrong one. Let me go this one. There we go. See this indicator right here called the MTI? The MTI it looks at the underlying trend of the market, and the RT looks at the short-term price trend of the market. Let me get that unscrewed up there. That RT indicator looks at the short-term price trend of the market. Is the market moving up or moving down? The MTI, which is this indicator right here, all right, looks at what we call the underlying trend of the market. It serves two purposes. We started talking about the market getting toppy back in the January time frame. I'm going to find the date of January 10th, right about here. January 10th, we were talking about the market looking toppy because when the MTI, this market timing indicator, gets to the value of about 1.5, right? You see right there, the market is looking for a top. What happened? The market did finally find a top. It pulled back. After it pulled back, it rose again. But as the market rose, look at what our underlying trend of the market was doing. It was falling. We talked to our customers about this being a bearish divergence. Folks, this was before all of this precipitous fall in the market. So this is primarily being done for the people who are in the room who are not subscribers, and you're curious to know how we called the market and got our customers out of the market. So let me take another step further. As we were moving up in the market and the underlying trend of the market was moving down, we also have a nightly newsletter called the VectorVest Views. See, after the market rose 2 days after the high, 2 days after the high, going to click right there, which is February 21st. I am going to go to our nightly newsletter right here, and this is what we call the Daily Color Guard Report. We do this every single night. Let's go back in time to the date of 2/21. We sorted and that was on a Friday. Let's click on that. On that date, let's go see what we said in the views. On that, we had an essay called The Test of Time. Let's scroll down a little further, and a little further. There we go. Prudent investors. What did we say? That was 2 days off of the top before the coronavirus. Prudent investors should not buy stocks at this time. Aggressive investors and traders should play the market with a bias to the downside. All right, something else happened on that day. We have something called looking at the movement of that VectorVest composite on a week-over-week basis. On that day, we got what we call the primary wave down. The market, that VectorVest composite, moved down on a week-over-week basis. Notice that prior to that, we had all of these ups. The market was moving higher, moving higher, moving higher. On 2/21 of 2020, we had a primary wave down. We had 3 red lights in the color guard. All right, the color guard price went down week over week, day over day. The RT went down week over week, day over day, and the buy to sell ratio went down week over week, day over day, giving us 3 red lights. Let's take this up one more day. Remember, folks, now we're 2 days off of the top before the coronavirus scare hit. Let's go up one more day, which would have been that Monday, 2/24. All right, let's go. This is what we do every single night. And as a VectorVest subscriber, you get this data every single night. Prudent investors should not buy stocks at this time. Aggressive investors and traders should play the market with now a bias to the downside. Every day we provide for you the 1 and the 5 day winners from a tool called the Derby, which puts you on top of what's working in the current market's conditions. On that day, contra ETFs were at the top of the list, 11.48% in 1 day. Bearish, buying contra ETFs up 11.48% 1 day. And then, as you can say, the rest is history. That's what happened. So given that data, the 21st, we started getting you out. Back in January, we told you that the market was looking toppy. It did rise, hit a new high, and look at that data as the market fell. 2 days off the top. Even if you missed that, 3 days off the top to get you out of the market prior to all of this going on. So anybody who's out there who's skeptical about what we did and what we said, there is a written history about what we did and what we said in that nightly newsletter. For any of you who are not subscribers to the software, again, I'm going to give you an opportunity to take advantage of a trial, but this is the kind of information that we give. Now, let's take this a step further. What do we do now? All right, so now market's falling. Look at the last week. Down, up, down, up, down, up. What is that called? Volatility. The volatility index is so high because the market is making these wild swings day over day, which is why I said with today's activity, one day does not make a trend. Now, if you're not a subscriber and you're waiting to know when to get back in, let me explain to you how you know the right time to get back in. One, how do you know when a market is bottomed? When it stops going down and it starts going up. The big thing is you want to be as close to the bottom to take advantage of the upturn. Well, the bottom hasn't happened yet. Now with today's update, could the bottom happen? We're not going to know unless we get more confirmation of up move tomorrow. If you are a more aggressive trader, if you get confirmation of an up move from today's activity, you can pull the trigger and start dipping your toe in the water. But wait a minute. If you're not that aggressive, what else do you look for? Well, there's a couple of things. Let's go back to the home page real quick, because the home page will give you that information in the color guard. Now, from the color guard, what do we look for? Remember I talked to you about that primary wave, the fastest indicator we have, which found in the trend column. I'm looking to see when the first two letters in the trend column turn to an up. That means now the market has moved higher, or the VectorVest composite has moved higher on a week-over-week basis. That's a little bit more confirmation than just looking at the bounce of the VectorVest composite and confirmation. But wait a minute. What if you're a little bit more prudent? Then we look for a green light in the color guard pricing column. That means the market moved up on both the week-over-week and day-over-day basis, generating a green light. That is really prudent. So 3 ways to know when to get back in. If we go back to the market timing graph, way number 1, look to see if we get confirmation of an up day. Today is an up day. Let's see if we get confirmation. That is day number 1, or way number 1, and the only people taking advantage of that move are your super aggressive, what I like to call gunslingers. Number 2, let's go back to the home page. I'm walking you through this, folks. Number 2, let's wait to see in the trend column if we get a primary wave up. That means the market is now, or the VectorVest composite is now moved on a week-over-week basis. Number 3, if you're a little bit more conservative or prudent, let's wait for a green light in the color guard pricing column. 3 ways to know when to get back in, and only VectorVest gives you that kind of information every day, all day, and that is why you pay for a subscription to have the software. This is no smoke and mirrors. This is no fly-by-night information. This is information that's been tried and true for 30 years. We know what we're doing. Now, am I going to tell you we're going to call the bottom? No. But I am going to show you, and I have showed you step by step, how to take advantage of the software to know when to get in. And you know something? With the advent of 2008, 2009, this could probably be one of the biggest explosions in the history of coming off of a bottom. Something to keep in mind, and that is why you want to be a VectorVest subscriber if you're not already a subscriber. I am not blowing smoke where it don't belong. I can back up everything that, all of the guidance that we've given is in the software. We don't make it up as it goes along. It's there. So anything we said, you can go back in the views and look at what we said back in 2008. Go back in the views and look back in March 9th, March 10th of 2009. That bottom we were actually able to call. So don't take my word for it. If you take the subscription to the software, you can back up what I'm saying, and there you go. All right. So with all of that being said, I thought that it was extremely important to spend a little more time on showing you how we got our subscribers out of the market and how we're preparing to get our customers back in the market at the right time. There we go. So now let's talk about the news associated with what's going on in the market, and let's get into our first news story. Where's my story? Now I'm getting ready to do that once I go look at the market. Look at this. Where's my stories? Is that it right here?
No, bro. Come on, man. Is it your first time?
It is my first time. Where's it at? Oh, I knew that. I just checked to make sure. So the government is trying to throw a lot of stimulus behind what's going on, and that's going to be a big major mover of where the markets are going to go from here. If we scroll up a little bit, the Fed deploys its full arsenal, but it still has some tools. Investors are looking for the central bank to help unclog markets for short-term corporate debt. How about we've now taken the Fed rate all the way down to between 0 and 0.25%. That's way low. We're almost to the point of zero, but the Fed is trying to do all that it can to stave off what's going on in the market. The Federal Reserve on Sunday unleashed its arsenal to prevent market strains from turning a public health emergency into a financial crisis, but investors are pushing for the central bank to pull more levers to cushion the economy against a severe turndown. So the Fed's job is to look after the economy. It looks at making sure that jobs are good, and it also makes sure that inflation is in place. Now, because the coronavirus is not only affecting the market, it is affecting our economy, so the Fed is jumping in to do what they can to stave off what's going on. What else? Trump. The government wants to start sending millions of Americans a check. Here's how to use it wisely. So the government is thinking about sending out checks to everyone who pays taxes. And right now, the numbers I see are $1,000 per adult, $500 per child. All right. So with that being said, they're giving money, putting it into our pockets so that, one, we could pay our bills. All right. Well, a lot of that's going on. A lot of people getting laid off. This gives us an opportunity as a bridge to get us from where we are to where we need to be to help put money in our pockets to pay our bills and actually to spend it and put it back into the economy. So the markets or the Fed is trying to keep the markets from going into even more of a severe downturn right now. So with that being said, let's get back into the software. Let's go back to the market timing graph. Actually, do I want that one? Where's my other one? Leave it there? All right, I'm not going to do it that way anyway. Let's just do it this way. All right. This one? This one? This one? There. All right. So what I'm going to do now is I'm going to add on, I'm going to do it this way. Let's just do this real quick. Let's go out on the VectorVest composite. And an indicator, if you're not a subscriber, is the spiders. So I'm going to put on the SPY. Let's go look and see what's going on with them. Here's the VectorVest composite, the VVC. This is that indicator that tracks the move of over 8,200 stocks. So if I put this on a 3-month graph, what's going on with it? As I watch it, what's going on? That's not. There we go. I'm seeing the market doing this back and forth mumbo, up and down, up and down. And every time it keeps going down, you say, is this the bottom? Let me show you something. Freehand line. Is that the bottom? Is that the bottom? Is that the bottom? And currently where we are right now. So we don't know where the bottom is going to happen, but at least I've given you more of an understanding on how to play it. And notice that each one of these updays, something else as a technician, each one of these updays, none of these updays have taken out the previous day's high. Look at that. So these candles are pretty much inside days. Look at this candle, not taking out the previous day's high. Look at this candle, not taking out the previous day's high. If I see one of these rebounds, that happen and it takes out the previous day's high, that is more of an understanding that maybe the market may have the wherewithal to start to bounce up. And that's from a candlestick or technician standpoint. So the market's up today, but overall in a downtrend. Let's go look at the spiders. Same kind of scenario. Down, down, up, down, up, down, up, back and forth. Notice that now on this one though, the S&P did take out the previous day. Nope, didn't. Didn't take out the previous day's high. Didn't take out the previous day's high. But on this candle on the SPY, it did take out the previous day's high, but with no follow through. So where do we stand right now? The market is still falling. And what are you looking for right now? I'm looking for the market to stop going down and start going up. We won't see a bottom until a bottom happens. But if you're using the tools within the VectorVest software, I've now given you 3 ways to know how aggressive you are when you can jump in, a little bit more prudent when to jump in, and a little bit more prudenter. Yes, I just made that up. A little bit more prudenter to know when to jump in. So that is to answer everybody's question of how VectorVest will help you get into the market at the right time. All right. Thank you for taking the time to watch this video. Now, if you're new to the software or would like refresher information about the software, click on this Getting Started video right here. Thanks to all of your input, here's a YouTube video that we think would be perfect for you. Click right here. If nothing else, folks, just hit the subscribe button right here.